All right. So first of all, thank you everyone for joining us this evening, especially to the live audience. I know you guys came earlier and registered early as well. Also, thank you for everyone that's tuning in online. So tonight we have a slight change in our panelists. Dinah and Kimi are both feeling unwell. So standing in would be Chief of Staff and Senior Partnerships Manager, Maddie, also from Asian Venture Philanthropy Network, and myself. My name is Sing, and I'm a wealth advisor at Stashaway. It's my pleasure to be your host and moderator this evening. So before I begin, I'd like to share a little bit about the She Invests Masterclass. So we've been hosting them on a variety of topics, and we have also more in the next few weeks as well. We've always been dedicated towards empowering women and closing the gender investing gap through financial inclusion and education. We've been hosting educational seminars and live educational webinars and live events since 2018. And back when I first joined Stashaway about 3 years ago, I remember when we had our weekly seminars, the majority of the audience, about 90%, were usually men. So sometimes after the events, I would stay to chat with some of the women. I would encourage them to, hey, bring your friends to your, girlfriends to the next event. And some of them are still a bit hesitant in doing so. So truly the idea of having She Invest by Stashaway is to have a safe space for women to learn together. But of course, men are also welcome. I see a lot of male allies in the audience tonight, and I am gladdened by that. So tonight's session is powered by Stashaway Reserve, which provides accredited investors to crypto and private market investments. Up till recently, Stashaway has provided public market investments, example, our globally diversified portfolios and thematic portfolios through ETFs, and even cash management solutions through money market funds. So with Reserve, we provide access to private markets by lowering barriers to entry with lower minimums as well. On top of that, we also provide clients with wealth advisory services, which includes financial planning sessions, portfolio reviews, and analysis. So in general, with Stashaway Reserve, we aim to change the way that accredited investors access alternative investments. So before we get to know our speakers tonight, if you guys have any questions, just some admin stuff, especially for those tuning in online, if you have any questions, feel free to post them in the Q&A chat box. And for our live audience, just feel free to raise your hands at the end of the session. We'll have a short 10-15 minutes Q&A for the panels. So first up, I'll be introducing our panels for tonight. So we have Shanya, who is an associate at Sequoia India. Shanya, welcome. Next, we have Maddie, Chief of Staff and Senior Partnerships Manager at Asian Venture Philanthropy Network. We also have Hester, who is a venture partner at Kaizenvest. And Wanda, Investment Director of Cocoon Capital. So thank you, ladies, for joining us this evening. So to begin, may I ask all of you to share a little bit more about yourself and how you got into the venture capital space as well.
Cool. Hey, hi, everyone. Very nice to be here today. So my name is Shenya. I'm now working in Sequoia Capital as part of the investment team based in Singapore, covering Southeast Asia investments from very early stage to growth stage. I've been with Sequoia for 3 years now. Actually, coming to 4 years now. So before Sequoia, I was a management consultant at BCG, also based in Singapore and covering regional projects in Southeast Asia. But back in BCG, more of my work is working with conglomerates and large companies and to fix their problems. And I have always been very passionate about entrepreneurship, startups who are shaping the future. So when I got an opportunity to work with Sequoia, I just jumped on it. And so far, I very enjoyed the journey so far, and very happy to share more about venture capital with all of you guys.
Hi, good evening, everyone. My name is Maddie Bajoria. I am Chief of Staff and Senior Partnerships Manager at AVPN. For those of you who are not aware, AVPN is not a VC. What we call ourselves is an ecosystem builder. So we're Asia's largest network of social investors. And in our network, we have everything from family offices, VCs, impact funds, philanthropic funds. So really what I will try to do in today's panel is sort of bring a more ecosystem approach and see how some of those lines are blurring in Asia between traditional VC, impact investing, and other models. So yeah, thank you for having me here.
Hello everyone, my name is Hester Spiegel. I'm Dutch. I am a venture partner at Kaizenvest, which is a VC firm that focuses on learning innovation, so future of learning and future of work. Was Asia's first, still quite small, but making impact in that space. My background is also in management consulting back in Europe, where I was with PwC and with Deutsche Bank for nearly 10 years. Then I made a switch into education technology, became the country head of a global edtech firm in Germany, set up 2 campuses of a very modern school. And then we moved to Singapore, and I wanted to continue my path into edtech because I think the future of learning should be driven by tech to make it more personal, more relevant, higher quality, more accessible. So that is how I ended up with Kaizenvest. Besides that, I run a female-only angel investment network. So also in investing, but earlier stage for only women, to give more women the confidence to invest. So pleasure to be here. Looking forward to tonight.
Hi, everyone. I'm Wanda, investment director at Cocoon Capital. Cocoon Capital, we're a seed stage fund investing in Southeast Asia. My background is also in VC. Actually, I've been on a couple sides of the table, been in investment banking, did M&A for tech companies, was a VC investor out in the US for a couple of years before moving on to the startup world. So I've kind of been on different sides of the table and now combining all of that experience into Cocoon Capital in Singapore.
All right, thanks for the introduction, ladies. So maybe to quickly begin, I would just like to define what is PE and what is VC and what is the difference before I start asking the questions. So private equity is a type of alternative investment where investors buy directly into companies that aren't listed on the public markets. On the other hand, so VC is also part of private equity. But it just focuses on funding to startups and small businesses. So, for example, your early stage companies that have demonstrated high growth or deemed to have high growth potential. So maybe the first question I have for Hester, maybe just wanted to understand the current state of the VC market. How have public market valuations affected opportunities for VCs, fundraising, valuations, etc.?
Thank you for the question. I think we're in a very interesting time at the moment, right? We're at the brink, we're at least seeing a downturn and we don't know yet where it's going to end up, if it's going to be a recession or a stagflation, as some are talking about. What we do see is already the reaction in VC. Valuation multiples are down at least 25%. Interest rates are higher. This impacts the buying power of the customers of the startups. So they have to basically change their strategy. So for startups, the general advice from VCs is basically to either make sure you have sufficient runway, right, for 24 months so that you don't have to fundraise, or make sure you have really show that high growth, as you were saying, which basically means 3x year on year revenue growth, which is high growth for Series A, Series B. That is where VCs still are interested in funding. What we see, the stronger deals still are getting done, but take a lot longer, right? Longer due diligence. Really, what does the strategy make sense? How is the team? Will they be able to survive the downturn? And the weaker deals basically do not get closed. That's what we see now. So it's an interesting time and we have to see where that ends up.
Maddie or Wanda, do you guys have anything to add?
I think echoing Hester's comments around valuations are down, I think what we're seeing, especially from seed stage perspective, that's where Cocoon plays. We don't actually envision slowing down anytime soon. I think we don't see a valuation crunch at the early stage, just because that is more at the later stage. I think the exuberance over the last, I would say, 6 to 9 months have been mostly around the later stage side of things. So for us at Cocoon Capital, we're still pretty bullish, full steam ahead in investing. So that is something that we're moving forward with.
All right. So what value do VC firms bring to their startups? What are VC firms doing to try and differentiate themselves? Because there are a lot of VC firms out there. So does anyone want to start?
I guess I can start from the AVPN perspective. So like I said, we represent what we call social investing, right? So we're interested in finance first models, but also finance models that are creating impact simultaneously. So I think for us, what we've observed in Asia that's most exciting in terms of how we're seeing VCs differentiating themselves is how they're helping support SDGs and bring a sort of as building out SDGs within their mandates, and how actually VC firms are contributing towards plugging SDG gaps by promoting in different thematic areas, by promoting something like, say, gender lens investing. This is a big theme that has come up recently in Asia, and in our membership network, we've seen a huge demand for upskilling and capacity building around gender lens investing. Similarly in climate. So I think one exciting way in which I think VCs are differentiating themselves from a social impact perspective is really being more intentional in how they are incorporating certain SDG frameworks and SDG mandates into how they're operating. So I'll leave it at that and over to you.
I'm sorry, I have a question. What's SDG?
I'm so sorry. The Sustainable Development Goals,
right.
which is, so the UN in 2015 set out a set of 17 Sustainable Development Goals. So maybe I should do a little bit of framing because I'm so used to speaking to a development sector audience, my bad. So Sustainable Development Goals were a framework set forth by the UN in 2015 to show along different thematic areas what are the issues and what are the kind of investments needed to be able for us to have a more just and equitable world. So there's an SDG goal around gender, there's one around livelihoods, climate, so various thematic areas, right? And what is clear is that in no part of the world, let alone in Asia, is government money enough to meet our SDG goals. So for example, whatever our goals are for gender equality cannot be met just by government funding. Private capital needs to step in to plug the gap. And that private capital comes from sources like VCs, from impact funds. And what we're seeing more and more, which has been very encouraging for us, is that VCs are stepping up and taking on the SDG mandate. So they're willing to build out those frameworks which look at impact alongside of financial returns. So that for us has been a very exciting new development, and we're doing all we can to support it. Yeah.
It's great to hear. Shania, do you want to share from your point of view?
Sure. Thanks, Mandy. So I just add a few points from our experience, how venture capital can be helpful to early stage founders as well as startups. I think broadly, I can categorize into three buckets. First one is definitely access to capital. You need capital to grow. And it's not only this round's capital. Usually, I think VC comes with a strong network of VCs. So after the current round, usually VCs can introduce the founders with like other growth stage investors to have follow-up capitals. So this is one thing Sequoia will do at our heart in Sequoia. So we have a dedicated strategy development team, which actually help our existing portfolios to raise the next round of fundraising, including introducing them to other investors. And second, I would say that what VC can help is really to share their tribe knowledge. So Sequoia being a venture capital fund globally for the last 50 years, we have seen similar models in elsewhere, and we have seen so many mistakes that different founders made in the way. So we are very generous in terms of sharing with our founders that what are the potential difficulties and challenges going down in the road, and help them with advice. And basically, we're just someone working side by side with founders and help them with advice. But founders will always take the driver's seat, and they will make the decision for their company. And last point, maybe I want to mention is really about talent network. I think one thing I feel very sharply for early stage founders is the challenges in hiring the best, highest quality of talent at very early stage, because for early stage founders and companies, you are no name. How do you compete with the likes of Facebook or like Microsoft to get the best engineers into your company, right? So I think for this, what Sequoia has done is that we have an in-house human resource team to help our founders hire, and we also accumulate our talent network and openly share with all founders. So I think all such three things are the things maybe are not including all the things we can help, but from my experience are very, very helpful to founders. And in terms of the second question about how does each VC differentiate, I think this will really differ VC by VC. From Sequoia's perspective, I think we being a global fund, I'm very proud of us that having the local team on the ground, because we know so many global VCs, they will say, okay, we invest in Asia, we invest in US, but we know decision-making is centralized in the headquarters. But at Sequoia, we're actually adopting a very democratic way in terms of investing. And we have local teams, like we have investors on the ground, we have portfolio specialists on the ground to provide our portfolios with hands-on support with the know-hows in the specific market. And we also build programs like Spark, catering to female founders. We built Surge to help early stage founders. We built like a program called Build for growth stage founders to cater to like founders' needs at different stage. So I think we are doing all this because we want to be differentiated in the space, and we want to be seen as truly helpful partners to the founders.
Thank you, Shenya. Thanks. Hester, Wanda, do you guys have anything to add to that?
I think not so much.
Okay.
I think that is basically what VC does. Also, like thought leadership and developing kind of the knowledge and for in a specific industry. That's what you also see, and what we do a lot at Kaizenvest too for specific industry. So for the rest, yeah.
Got it. So maybe if we look at it from another lens, like from a founder's perspective, how should I choose a VC? In case there are any budding entrepreneurs down on the floor or online watching from home, what should founders look for in their VC of choice? Does anyone want to go first?
I think there are a couple axes, and if you Google, you'll find that look for network, look for track record, look for in-house expertise. But I think what we at Cocoon like to tell founders is what are your strengths and where are your weaknesses and opportunities for you to grow, right? And look for VCs that will help plug that or support you in that growth. The other thing we also do is to ask our founders and ask a lot of founders that we meet to do back channel references, right? Go on LinkedIn, look at who we've invested, talk to those founders, because a lot of times what's more important is not VCs to support you in the good times, but those that actually kind of support you through the rougher periods like now, perhaps, and understand what happens when things go sideways. Do they ignore you? Do they tell you they're never funding you again? Do they help re-strategize and relook at your budget? So that's how we would look at that.
Anyone else? Maddie?
Yeah, I think what we're seeing in our network is founders, because we also have we have a deal share platform in which we have list a huge number of social enterprises. And what we're seeing is a huge amount of alignment in terms of cultural fit and values. So just take, for example, something like ESG. More and more of our social enterprises are looking for very strong ESG alignment fit when partnering with VCs. And that's simply because they're responding to the needs of their customers, because there are all these surveys out there that show that customers want there's, I think, 75% or something like that of customers want to align themselves with enterprises that have strong ESG values and who are shaping ESG proactively and not simply reacting to it. So I think we're seeing a lot of that type of cultural, I think cultural and alignment, value alignment is very important thing to look for. And as a network, one of the main things we stress is unusual collaboration. So I think also looking for a VC's networks and relationships, which can help the founder forge the sort of unusual collaborations that truly lead to something innovative is also really important. So yeah.
Shania?
Yeah, I think that maybe I just have one minor point to add. I think Mandy and Wanda has elaborated it very, very well. Founders will look for who can give them money, who can give them advice, who have the network to help them develop their business. But I think one simple advice to founders is that just talk to other founders who worked with the venture capital before, and you will learn more real life experience about how the venture capital has helped the founder and how did they behave in tough times, and are they truly long-term partners with the founders. So I think, yeah, maybe just this minor one point to add.
Yeah, a story comes to mind of a founder that I spoke with the other day. So I angel invested in that company, and they are looking for their pre-series A. And she was sharing with me a story, and I said, so she found a lead investor. I said, are you happy with it? And she said, yes. I said, why? And I was expecting a story like, because there's a great strategic fit, or they can help us with this and that. And she said, with them, I feel like a founder and not like a female founder. And I kind of knocked me off because she said, as I was looking, and she's a female founder, right? And as I was looking for an investor, she was treated as a female founder, which annoyed her to great extent, right? She has experienced ways that it was just inappropriate, but also that she was special. And she was like, I just believe in what I am doing, in my solution, and I just want to build it. And whether I'm male or female doesn't matter. So sometimes it's very personal and from an unexpected angle. Yeah.
Thank you for that, Hester. I think that was a good one. I do have a related next question, and that is very cliche, but of course, is the industry largely male dominated? And how has that changed over the last 5 to 10 years based from your experience?
I think there's one statistic that says it all. There's 2.4% of the decision makers in VC are female. It's very, very low. So I think that says it all, and how that shows. Maybe you also have experience, but I think it is it's male driven. So there's particular things going on, like a lot of mansplaining, which I also see as invested by even male founders. Right? They say, "Let me tell you what burn rate is," and said, "Yeah, okay, thank you. I know." Yeah. So there's I don't want to generalize, but those are certain things that are going on, which may have to do with gender difference. I don't know. But I think the 2.4% of female decision making in VC is quite a tragic number, which actually needs to change.
Yeah, if I add to that, completely echoing what Hester just said, I think what we've actually, if we look at trends in Asia, we actually see that 2.4% is a huge improvement from what it was even 5 years ago. So it's mind-blowing to think that 2.4% is actually something at this point we should celebrate, given how abysmal the numbers were even 5 years ago. And I think I have a statistic here which says that I think there's only 9% of total VC deals in Asia that were closed by female partners. Again, huge improvement from 5-10 years ago, but this I think just shows how much there is to be done in this space. And in our network, we've seen some very shining examples of women and women-led funds really become champions for kind of carving a pathway in this very male-dominated space. And I think one example is, so we launched a first of its kind network called the Asia Gender Network, which is 30 odd ultra high net worth Asian women who all run some sort of either philanthropic funds, impact funds, investing in gender issues across the continent. And we have this incredible woman, Shinta, I mess up her last name always. She is the founder of Bubu.com in Indonesia, who's sort of essentially brought the internet to Indonesia, which opened up so many doorways for women entrepreneurs to sort of, completely skyrocket in terms of livelihoods. And then we also have Teja Ventures, which is the first Pan-Asian VC capital fund, which is committed to investing with a gender lens right throughout the value chain. So whether it be suppliers, whether it be consumers, online audience, everything. So we do have some very shining examples in Asia, but sadly, as Hester said, they continue to remain the exception. And there's a lot more to be done to be anywhere even close to equity.
I've got Lauren, my colleague here, so I'm going to ask for forgiveness, but I'm going to double down on the doom and gloom. read a recently published paper that female founders that are funded by female VCs are actually 2 times less likely to receive follow-on funding. So it's a pretty new paper out there. Sorry, Lauren. But I think what we're seeing, to Maddie's point, is just a rise in female VCs and female founded VCs as well, right? Where I think I would say a little history lesson goes back to how old I am, I guess. But back in the early or mid 2010s, there was talk around, not enough female VCs. And then I saw a rise of female associates. So I was part of that rise, I guess. And then now we're saying there are not enough female decision makers at the partner level. So we're seeing a lot of that. And actually what we're seeing as well is that not just partners, but executives at tech companies are leaving and starting their own funds, right? And so that is a power move. Hopefully we see a lot more of that, a lot more work to be done, but that's where we stand.
So perhaps the next question would be, what are the various metrics that VCs focus on when evaluating whether to invest in a company? What are some potential red flags that you might have come across before? Anyone wants to start first?
Yeah, maybe I can start on this question first. I think if we talk about specific metrics, it will definitely be very, very different across different industries. But for VC in general, what we are looking for is something to demonstrate that this is a very large market opportunity, right? So as well as it's a sunrise industry. With a lot of tailwinds instead of like a lot of headwinds. Secondly is that we are looking for some metrics, no matter how early it is, to demonstrate product market fit. For example, if you are selling a consumer product, how much does your customer love it? If you are selling a software, how often do your customer use it? And how long is the engagement? How good is the retention and so on. So we look for such metrics to check that, okay, your customers love your product. It shows clear product market fit. And the last point we look for is really about your go-to-market strategy. How do you scale your product? So I think those things in combine will give an early stage VC a good decision whether it's an investment to go in or not.
Yeah, but what I see a lot with the early stage founders is, and that is also why I love working with founders, is they're very positive and enthusiastic about their solution and their product, right? They tell you all about it, what it can do, but exactly as you say, they forget to look at it from their user's perspective. So there's a lot of assumptions going on, and there's a great book about this. It's called the Mom Test by Patrick Fitzgerald, I think it is. Small book, but it's brilliant. That shows this point, like test your assumptions. It may be that you have the next best product on the market, but it may very well be the case that it's not, right? So test your user experience, and that is what early stage founders, I think, often forget to do. Really, the market research, the willingness to pay, etc., all those things. And I'm not sure you said it, but team, I think, is super important as well, right? If they have the grit really to pull it through, it's super, super hard to be a founder, I think, in every stage, more so early stage, but also to going through Series A to Series B. Does the founder have the grit? What does the team look like? How do they know each other? Are they good together? Those are, I think, because you can change, you can pivot, right? You can pivot your solution, but you cannot pivot the team. Then the startup dies, basically. So yeah, have a good look into the founding team.
Yeah. So maybe I'll weigh in with a few trends we've been observing from our network. We've seen our members become very intentional about their impact, specifically any adverse impacts from their investments, and in terms of what the outcome the enterprise is contributing to, who benefits from it, what are some negative externalities, and just a few things that we see a lot of our members tracking. Are strong social or environmental impact imperative, and are they embedded in the core business of the model? We're seeing them look at how agile and adaptable the team is, and are they able to respond to very quickly changing scenarios? And this is something I think that has become more important since the pandemic. Looking for clear, trackable outcomes and very robust data systems, I think is something we are seeing across the board. We're seeing again, to my previous point about gender lens investing, we're seeing more and more people, more and more members look at how enterprises are supporting women's empowerment, and investors are actually building out a gender lens into the due diligence process. So there's a assessment tool called the Gender Equality Scorecard, which provides this sort of framework, a due diligence framework, and we're seeing more and more of our investors take on these sort of frameworks. And I think, there was a very good example of this Singapore-based VC called Thrive. That's part of we are part of this community called the Impact Management Program, IMP, and that really what they've done is that through this IMP program, they've devised three things that they look at. When evaluating an enterprise, does no harm, benefits people, actively contributes to solutions. Now, of course, this is more from an impact investing standpoint, but like I said, the lines are blurring in Asia a lot. So I think a lot of any kind of negative red flags or negative impacts can be filtered out just by applying some of these frameworks that are out there, like IMP, like the Gender Equality Scorecard. And I think someone just made this point. I think there are studies that show that more and more investors are looking at how the enterprises are engaging the whole community in designing solutions, and not just a narrow customer base. So again, more from a social impact perspective, but we are seeing a lot of our member networks, our member organizations start to internalize a lot of these different frameworks.
Wanda, do you have anything to add?
I'll perhaps answer the red flag side of things. A lot for us, I think a couple come to mind in terms of red flags. The biggest one actually would be honesty and integrity for our founders. To Hester's point, it's always about the team and the founders. For Cocoon, we invest in 2 founders in a slide deck, right? And no revenue, pre-product. So for us, it's really understanding and being able to work well with founders, and also for them, it's our job to actually understand all the risks. So when a founder says, no, I'll back up. A question that we ask really often is, what keeps you up at night? Kind of giving a little secret away, but one example question that we always ask, what worries you? What do you think you can't execute on? And sometimes founders says, no, we're good, 100%, no worries at all. And that for us is a massive red flag, because you're not being quite honest, or you're too naive, et cetera, et cetera. So for us, it's really the ability to trust and work with founders. It's our job to find challenges and risks, and for us to then mitigate that alongside the founders.
Yeah, makes sense. So maybe if we change a lens again, from an investor's point of view, looking at VC as an asset class. So what role should VC exposure play as part of an investor's broader portfolio? And anyone wants to go first?
Since I'm on a roll. I would say, broadly speaking, for our LPs at Cocoon, high risk investments take up anywhere from 5 to 10% of their portfolio. If we look at broader kind of endowments and foundations, some university endowments that rhyme with fail, or I guess it starts with Y and ends with AL, have up to 22, 23% of their portfolio just in ventures. So it really depends on your appetite for risk, how long you can hold, and know that VC investing in funds, that's really a 10 to 12 plus year investment. Can you let capital hold up for that long?
Anyone else have anything to add, Maddie or Hester?
No, I think what Wanda says, 5 to 10%, I think should be the earlier stage, the higher the risk, right? So yeah, I would say very early stage, pre-series A, I would not put more than 5% in, but I'm by no means an investment specialist, so I don't want to go too far on this topic, but
okay,
as a rule of thumb, yeah.
Then in the same lens, then what are the metrics that an investor should look at when deciding whether to invest in a VC fund, and in terms of evaluating fund managers as well? Wanda?
I can go if I can refresh my notes, pardon me. Just scrolling through here, give me a second. I think for us, this is on metrics, right? Just to make sure the question. For us, there are lots of metrics, but I think typically you can look at, how to put this? Is it okay to go alphabet soup? There's IRR, internal rate of return, or rate of return, MOIC, multiple on investment capital. So there's lots of alphabets that come in, and metrics that come with this. I think another way to look at least in Southeast Asia, is that the market is pretty nascent, right? Not a lot of funds have the track record that if you look at the West and in the US or Europe, that these massive global funds have. So for us and our LPs, they look and evaluate funds based on what is this fund's unfair advantage to accessing deals. So we call it deal flow. Accessing founders and making sure that founders want to take out capital, because ultimately VCs, we're salespeople. We sell money. We sell money to founders, and also what is unfair advantage in supporting these founders to success. Going back to your question earlier before seeing, so that's something we look at. I think if we look at numbers, because I think sometimes we want numbers and concrete numbers here. IRR, if we have a 10%, that's, you're just about beating the market. Great. If you're looking at 20%, I think you're top quartile typically. 50%, definitely sign me up. I'll put my money in as well.
Again, I'll just come in with some numbers we've seen in the pandemic years. So we've seen about 80% of investors in Asia Pacific have raised their ESG investments significantly or moderately. So in the last 4 months of 2020, we saw $5 billion being put into ESG investments in Asia Pacific. And I think at DBS, assets under management in ESG funds jumped 350%. So this is, again, these are numbers that show that these are some trends we cannot ignore in terms of how impact is becoming more and more important in how investors are evaluating where they're putting their money in. So just wanted to share some numbers.
So the next question would be with regards to Southeast Asia's tech boom. So as you all probably know by now that we are home to one of the most exciting and dynamic startup scenes in the world, especially with the COVID-19 pandemic. It made many people very reliant on the internet for their daily needs. So many startups in Southeast Asia attain unicorn status, reaching valuation of more than $1 billion. In Singapore, especially, we have seen Sea and Lazada and Indonesia, go to recently IPO'd. So what are some exciting trends in the region that you guys are seeing, and what's key to take into account when investing in the Southeast Asia market from an investor's perspective?
Happy to go first. Yeah. I think in the education space, where of course the pandemic was a game changer, right? It was a real paradigm shift. We cannot even imagine not being able to learn online anymore, right? So that will never go back, although schools are opening, but online learning is more than only schools. We saw an increase of 170% of a number of investors going into education technology. So that was a big uptick. And I think for education technology and future of learning and work, we have to see if that stays, right? If now the demand is still so high, or if it will go back to the old level. So that to the specific industry of edtech. For Southeast Asia in general, I personally think it's hugely exciting region, also compared to Europe, right, where I'm from. In Europe, there are so many regulations, there are so many legacy structures, systems, processes in place that make it difficult to grow so fast, right? These regulations are not so much in place here in Southeast Asia. Singapore is amazing, right? What the government does in terms of support to grow these tech companies, right? There's all these platforms there. They have funding, they have grants, they have programs that connect founders with investors, with mentors, accelerators, etc. So a lot of support from the government in Singapore, and I think that definitely helps. But as a region, the clock just speeds faster, right, in Southeast Asia, and I think that is hugely exciting. Your investment dollar has more reach, more impact. People come online quicker than in other regions because everybody has at least one mobile phone, right? And sometimes even more, 1.8. I think it's here, and very advanced business models, which I also don't see in Europe. So a lot of unbundling and disintegration going on here, which I think, has a lot of potential for different industries.
Anyone else has anything to add on the Southeast Asia scene?
Yeah, I'm happy to add. I think in general, what we have seen is that the first wave of internet brings us democratic access to products and services. That's why we see the rise of e-commerce, ride-hailing, fundamentally changing our life, making it more and more convenient. I think going forward, there will be new ways of working and new ways of learning, like Hester just mentioned. And also one thing special about Southeast Asia is that we have a large population of SMEs and even MSMEs, which is fundamentally different from the developed market like US and Europe. So I think at least from what we have seen more and more companies building tools and building SaaS products catering to SMEs, which we think is very, very interesting. This is an unmet need in the space, and also for SaaS products, it can go beyond the boundary very, very quickly. You can sell products virtually across the globe. So we have seen more and more companies being based in Singapore, based in Southeast Asia, by actually building SaaS tools, selling globally. I think that's really something we are very proud of, and this is definitely one key trend we want to catch. And the second part is really about the whole Web3 as well as blockchain rising up in our space as well. I think Singapore benefited from its very friendly regulations. It has become a magnet for Web3 talents. So we have seen many like Web3 talents coming to Singapore, setting up companies here, and building for global Web3 infrastructure, building for like DeFi protocols and so on. I think this is also one key trend we have observed. And another thing I want to mention is that Southeast Asian customers are super social. And they actually, since the adoption of mobile, they jump to new things very, very quickly. That's why we see the first very successful like play to earn game, Axie Infinity, actually started in Vietnam and Philippines. So this is not US and not Europe, but in our home market. So I think this is also something we very special about Southeast Asian customers. And given the new trend of how Gen Y and Gen Z network with each other in the metaverse, as well as how the new definition of owning something in the digital world, given the rise of NFT and so on, I think the whole Web3 and the crypto space is also a very interesting area for VC to look into more.
Thanks, Shania. Does anyone has anything else to add? One.
I think I know how to turn this on now. I think in terms of trends, the rest of the panelists have mentioned a couple. I think for me, from my perspective, having a change or coming back to Singapore from the US, what I've learned personally is that a lot of what has worked in the US or in the West, you kind of have to question that. So an example would be logistics, right? Or telematics. I invested in a company, exited that, thought that wave is over, and that, in Southeast Asia, been there, done that. But actually, one of our top performing portfolio companies is in the telematics space. So I think to Hester's point about changing business models, that's definitely something that we're seeing. Another is that whatever we think has passed or that is with global companies that have been very successful, they're not going to be very successful in Southeast Asia, just given the dynamics and of the region, right? 10, 11 countries, hundreds of languages, regulation, that's the wild, wild west. So in terms of industries and trends, I would say it feels like every industry has room for growth and room for innovation. It comes down to what makes sense for Southeast Asia itself.
So I do actually have a question from the online audience, also related to these tech startups in Southeast Asia. Perhaps this, do you know if most of the capital come from overseas or local, and more investors prefer direct investments into the startup, or those who prefer investing in other type of funds? Does anyone have any thoughts to add on to this?
I can speak for the edtech sector. The most investments are made by US investors in the edtech sector. So that those are Southeast Asian edtech companies. It is Y Combinator, 500. Those are the biggest. Tiger. They invest in the edtech industry. So that is what I can answer for that specific industry. It's a very young, especially Southeast Asia is very young, but edtech is young on top of that. So that is only 30% of the edtechs in Southeast Asia are funded, and 70% of the funded ones are in seed stage, right? Just to give an idea how young that is. So so these would be very early stage type investors. And I think that depends whether they want to go direct or via a fund.
So this would be where our LPs come from. It's a pretty broad mix. There's some from countries like Mongolia, for example. We have one. But I would say it's a pretty even split between the West, Europe, and the US, as well as Southeast Asia funds, ultra high net worth individuals, to family offices, multifamily offices, to pension funds, endowment funds. So it's a pretty broad mix of where our funds come from. Was there a part 2 to that?
So part 2 is whether they invest directly into the startups or do you prefer investing in the funds through the funds?
Got it. So it's a bit of both for us at Cocoon Capital. We have investors that like investing in Cocoon because that gives them an opportunity to invest directly into other funds. So I'll give 2 examples. Some of them are, ultra high net worth individuals that invest in funds because they love startups, right? And these are, just career finance guys, for example, out in Europe or the US, and they believe that there is a rise that they missed out on the boat in India and China, and therefore Southeast Asia is the next massive kind of velocity and volume play. So that's why they are heavily invested in Cocoon Capital, and they believe that they will follow on directly into the funds or into the startups themselves. Sorry, did I answer?
Yeah, thank you. So now we'll open the questions to the floor. Does anyone has any questions? We'll get a mic to you. Yeah.
Hi. First and foremost, I really like to thank all of you of just coming here and sharing with us all your knowledge. And I think so. My question is, I think you have given us a lot of knowledge as the audience. So as the audience, how can we give back to you? Like, do you all have any causes that you are here to champion today? And how can we as the audience help you out? That's my question.
It would help to know who's in our audience.
Yeah. So who's a startup founder? Okay, 1, 2, 3, 4. Who is an investor? 1, 2, 3, 4. What else? What else are you? Just interested. Yeah. Sorry? Onlooker, exactly. Onlooker. Okay. For me personally, it's great to talk about this, and love also to learn from you and what you need, really. Nothing directly for me, but thank you.
Yeah, I guess I would do a shameless plug and ask both startup founders and investors to connect with AVPN. We'd love to have you in our network so that we can think of how to social investing. So thinking of how to balance finance first models, social impact, moving the needle towards impact in Asia. And just because I know, as was evidence from my response to the first question, this sector is so full of jargon and so many concepts that are unclear, fuzzy. So as a first step, as an ecosystem builder, a first step we're taking towards trying to simplify all of this is end of June, we're launching a report with The Economist called The 10 Principles of Social Investing in Asia, because a lot of these ideas and concepts are borrowed from the West, and there hasn't been a lot of thought around firstly, what even is social investing, and 2, what it means in our Asian ecosystem. And within Asia is not a monolith, what it means in Southeast Asia, what it means in South Asia. So we're attempting to deconstruct. We've done a lot of primary research, secondary research to bring together in a very simple format what this concept even is, how each of you fits into the ecosystem. What are some best practices and how can we be a part of this movement? So I would say, please connect with me and stay tuned, and would love to engage on how, as we, we're calling it the Asian decade, and how do we leapfrog our European and American counterparts in this Asian decade where we're going to see a massive amount of wealth transfer, and how we're going to sort of think of shaping the Asian ecosystem to really, of course, have incredible investments that also address some of the most pressing challenges in our continent. So, yeah.
You actually gave me an idea. There is something that we're growing this female investment, angel investment network. So for women who would like to understand better investing into startups, we are growing this Asian network. It's called Epic Angels. So you can reach out for more information. We give information sessions just about what it is like, how it goes to invest in early stage startups in the region. And you can join if you want to get active and to connect with our network. It's a group of women from very diverse backgrounds. And we support not only female founders, but we require one female in the core team. So we're only female investors. So if anyone's interested, reach out.
Thank you. It was very useful sharings, and I have some questions that I think you probably have touched on, but I want to maybe clarify a bit further. Just specifically for this in this environment, do you have any industry focus for say 2022 or 23? Are there any industry that you specifically want to focus more? Whether it's fintech, SaaS, you mentioned, or you is edutech, that's one. And for geographical focus as well, is there any specific, country in Southeast Asia that your allocations would be more towards for the years or next year? I come from Vietnam, so for the next question, very specifically to me, I was just asking, when you view a startup coming from markets like that, is the market big enough? Is the market fit, product fit for the country like Vietnam? Is it good enough, or the regional focus is also a must when let's say your fund would consider to invest? Yeah, thanks.
I think there are maybe like 3 questions in there, so I'll attempt to answer the last one first on Vietnam and how we at Cocoon feel about the country, investing in the country. We've got, Lauren, correct me if I'm wrong here, what, 3.5 maybe? 3.5 being one founder based there, but it being a global company invested in Vietnam. The biggest one in our portfolio is actually Tuxi, or I learned how to say this, Tuxi. So it's a pharmaceutical market, B2B pharmaceutical marketplace, and they're doing really, really well. So we believe in Vietnam. If we look at it, from a Southeast Asia perspective, they've got, I would say, the largest percentage of the population in the middle class, or rising to the middle class, right? So to the points that Shenya mentioned around the buying power and digitalization of just life in general, I think, for Vietnam, we're extremely bullish about that. So I was just in Vietnam about a month ago, meeting with founders and hosting mentoring hours. That's a big part of the work that we do as well. So very bullish. I think that's the short answer. I'll leave the first 2 perhaps to the rest of the panelists.
Yeah, speaking of Sequoia, I think I'm based in Singapore, so I focus, my team and I focus 100% on Southeast Asia. So this is our regional dedication to Southeast Asia. We are quite industry agnostic, so we are interested to learn more about any sectors as long as they have a technology angle. So we don't say that we only invest in SaaS or fintech or e-commerce or logistics or Web3. Any companies please feel free to reach out to us, and we're happy to have a chat. So I think that basically answers your first two questions. For the last question, you mentioned about Vietnam. I think actually I love Vietnam. Before COVID, I go to Vietnam very often, like at least once per month. I think I see a lot of entrepreneur activities on the ground, and even many of them are not like startup founders, but all of them are doing their small business at the side. So I see the whole country very, very happening, and a lot of entrepreneurship spirit and so on. I think it doesn't matter where you start. Being in Singapore or Vietnam, because actually statistics within Sequoia is that for our Southeast Asia portfolio, actually 40% of them are based in Singapore. And you can argue Singapore is not a large market by any means, right? So I think what really matters is that founders focus on a problem genuinely and finding product market fit and scale it with a growth mindset. In terms of expanding it, keep expanding it, expanding your TAM, total addressable market. You can, if you find very strong product market fit in Vietnam, we are sure that if you can outgrow yourself, outgrow the team, you can replicate the model in other markets as well. The sky is the limit. So I think it doesn't matter where you start. Yeah.
Yeah, just on your last question, we've seen a very exciting model in Vietnam. We've just concluded some work where, like I was saying, there's a lot of blurring and blending of the different types of capital. So very exciting blended finance model in Vietnam, where the government of Australia, DFAT, provided anchor funding to look at, I think you were mentioning MSMEs, and actually gender diverse MSMEs in Vietnam. So looking at two lenses, gender diverse MSMEs and digitalization of MSMEs, because it's a very vibrant space. And as we know in Southeast Asia, MSMEs are mostly women-led, and that's where capital falls short from non-government sources in a big way. And so actually the seed funding from the government of Australia was used to then unlock, almost used as like a investment readiness fund to help them get ready to receive private capital at a later stage. So that's a very exciting sort of blended finance structure that we've been a part of in Vietnam, which we're looking to see where it can go. And also it has huge relevance across Southeast Asia. So we're going to be doing something similar in Indonesia on the backs of their G20 presidency, and actually establishing a task force to look at gender diverse MSMEs in Southeast Asia with a digitalization component. So yeah.
Maybe we'll just take one last question from the floor before.
Hey, hi everyone.
2 questions.
No, this is going to be a simple one, but probably the answer that you're going to give me is a she. But I'm starting with that. So this was Sequoia, especially. Surgeons, especially doctors, they tend to get into this God mode, which means that they believe you can be like God because you change things. You actually help people. You can save people. You can prevent them from dying, right? So they feel like God. Quite often, managers, founders, or maybe even the partners at VC firms probably tend to get into that mode, right? God mode. You can change destinies of founders. You can change destinies. Sequoia has seen that recently with, the less said, the better, but where you allowed investor capital to go down because one of the partners got into a spat with one of the founders, and then the founder exited and stuff like that. But how should people feel about trusting their money with VCs when things can get personal? So how do you draw the line? Like I said, the answer could be you have more females because they have better emotional quotient. They have better EQ. They probably won't get into that. But the fact is that, how do you prevent that from happening?
Does anyone want to go?
Case in point was the lingo, if people didn't figure that out.
It's probably the end of your business, no? I think you cannot do this. It's simply unethical and unprofessional. So once that happens, it's the beginning of the end of your company. That's how I see it. you will get called out. You will get caught. It doesn't work that way. Especially larger firms like Sequoia, I think their ethical standards need to be very, very high, especially for the reason you're saying. If they start to default and go off track, in my view, that's the beginning of the end. Therefore, it won't happen. It's my take on it.
And one last question from you.
Many projects in the Web3 space, specifically decentralized finance projects, carry an anti-VC sentiment. So how do you think VCs can enter into a space where community members are not so welcoming?
I'd say that's a challenging one. When I was in Vietnam, there was definitely talk of that amongst the founders and also funds in general of how do we then work with decentralized finance. I think they're just very anti-central anything, and therefore VCs and institutions in general just get wrapped up into it. I would say there's not necessarily quite a convincing thing of having, convincing DeFi founders to take VC capital. I think is for them to understand that there is value. Going back to the kind of the first couple questions of what is our value add as a VC, and do founders believe that? So that's a big one. I think one company that I've been speaking to in the Web3 space, more on the Web3 infrastructure, founder she considers herself maybe more Web 2.5, right? Where she says, I understand that I will be tailoring or kind of serving the DAOs, the DeFis, but at the same time, I see value in building a company in today's market. And that's why she's taking money from Web3 VCs.
All right, we do have one last question from the online audience, and that's perhaps more specific for Shenya, Wanda, as well as Hester. So Anonymous asks, what are the top events you attend every year as a fund manager, and why those events?
I need to think. It has been COVID for 2 years. I haven't been attending any events. I think, okay, I think maybe one thing I can mention is Pit Stop hosted by Sequoia. This is one of our most important event annually, where we bring together our founders as well as we invite investors in the growth stage to network and to learn from each other. I think that one event basically can not only benefit our portfolios and also benefit our investors to build up network and to learn from each other, and also learn from like what's been happening in other places outside of Southeast Asia.
Answering a lot of questions. I would say for the VC side of things, I'm relatively new back in Southeast Asia, but I would say this is probably consistent across regions. It depends on what the events are for and what we're doing, right? Whether are we fundraising and going out to meet LPs, limited partners, ultra high net worth individuals, to are we sourcing? Or are we purely just trying to elevate the whole ecosystem by giving back and speaking at panels like this? So I think it really depends. There's no one event. The one that's happening right now in San Francisco, RSA, that's for cybersecurity. There's no one kind of event that VCs attend in Southeast Asia that everybody must go to. But I would say it's industries, because Southeast Asia is so dynamic and so disparate, depends per country. Vietnam has their own, for example, Indonesia has their own. Then you also look at sectors and stuff like that. So it's a little bit different. There's no one event.
All right, thanks everyone for the questions. I think we will wrap up today's session, and thank you everyone for joining us today, as well as our panelists. Please give a round of applause for them, please.